Hi, everyone, and welcome to tonight's real estate webinar on buying real estate and free money to help you buy a home. Tonight, we're going to cover a lot of topics and a lot of various programs on buying a home. What I want you to take away from tonight, though, is that most people, including yourself and most people that you know, likely qualify for a down payment assistance program. There's over 20 programs just here in San Diego and the state of California that folks can qualify for. And of these 20 programs, you can potentially qualify for not just tens of thousands of dollars, but even over $100,000 given to you to buy your first home. Additionally, you don't necessarily have to be a first-time home buyer. As long as you haven't lived in a home that you own in the last 3 years, you will qualify for most of these programs. You also don't have to be a low-income person. Some programs, yes, are for low-income families, median income families. For some programs, you can make over 6 figures and still qualify for them. So we're going to deep dive into some of these programs tonight. We're also going to go over some of the advantages of home ownership versus renting. On that topic, you might have seen the headlines within the last week or two showing that San Diego is now the third most expensive rental market in the United States of America, right behind New York City. So if you want to give up renting and own the real estate you live in, and the only thing stopping you is that down payment, this is the webinar for you. We'll close out the webinar by discussing the steps to buying a home. A lot of times it's kind of a scary process. I get it, to get into home buying. So we'll kind of knock down some of the unknowns and the fears by the end of tonight's presentation. With that, just taking a look at everything we'll go through, I'll start out with a quick introduction on who I am. And as you see here, it says who we are, because I belong to an organization called the Kappel Realty Group, and we help both home buyers and seasoned investors buy real estate. After a quick introduction on my team, we'll go into renting versus owning. What are the benefits? And we'll talk a little bit about interest rates today. Then we'll deep dive into these free down payment assistance programs that we talked about in various lending options that you can qualify for. And as mentioned, we'll close it out by discussing various steps to buying a home. I also want to tie in now that if you have any questions, please ask those at the end. And at the end of tonight's presentation, I'll stick around as long as you do to answer any Q&A. Also, tonight's webinar is going to be posted on YouTube. So if you want to rewatch it, or if you want to share it with any of your friends or share it with your family members, certainly check out our YouTube channel. And you can rewatch this webinar and many other real estate webinars that cover everything from first-time home buying all the way to investing in real estate and everything in between. Now, quick little background on myself. I've been in real estate for just over 15 years. Now, when I started in real estate, I was in the U.S. Navy. In fact, I've served in the Navy now for 23 years. I enlisted in 2000. I ended up going from enlisted to commissioning, so I got a commission later on. And I was a young officer in the Navy in San Diego in 2007. All of my friends told me not to buy real estate, that I should rent instead, because they said renting's cheaper than buying. But instead of listening to my friends, I did what we should all do. And I listened to people like 20 to 30 years older than me. And everyone much older than me was saying, Patrick, buy real estate and buy as much as you can. So throughout my time in the Navy, after every deployment, I would buy a property. I would deploy, come back, and buy a property. And after a while, I started realizing I was building more wealth and financial security by owning real estate and turning them into rentals than I was through my day job in the Navy. So I left active duty for the Navy Reserves, and I still serve to this day, 1 week and a month in the reserves. But starting in 2015, I began building the team I have today, the Kappel Realty Group. We specialize in helping first-time home buyers and what we call mom and pop investors. And that's really people buying real estate in San Diego. Our team has sold nearly $500 million in real estate in San Diego in just the last 5 years. That consists of over 750 units. And although we're a rather young team, having been around for just over 5 years or so, we've sold a lot because we're a really highly educated, high performing team of individuals. Everyone on our team owns real estate. Most of our team members also invest in real estate. Over half of our team members have master's degrees, primarily in finance and real estate. And you can see the education in the center there. That's just my education. I started out at the Naval Academy where I got my undergrad. Then I went to UCLA to get an MBA with a focus in finance. And I topped it all off with a Master of Science degree in real estate at the University of San Diego. You can tell by the education there, I'm a huge fan of education, and it's education that I want to share with you today. My brokerage sales team has always approached real estate sales not from a sales approach, but from an educational approach. And that's what we really pride ourselves in working with clients. As you can see, the awards on the right there, our team is consistently ranked amongst the top 1% of all real estate brokerage teams in the United States. And we're currently ranked as one of the top 2 large real estate brokerage teams in the entire county of San Diego. And the one last thing I'll say about our team, because like I said, it's not just me, it's an entire team. You can see a photo of all of us there in the bottom left. The top left is just the national write-up that we received just a month ago or so for being ranked in the top 1%. But the bottom right is what I really want to key you in on. I didn't work in real estate my whole life. I wasn't born as a real estate agent. Like you, I was a consumer. I had a different job. I worked in the military. Once upon a time, I didn't understand anything about real estate. And I mistakenly thought it doesn't matter who your real estate agent is. So I would work with a friend. I would work with a friend of a family. I would work with someone I knew who worked. And a lot of times I find that consumers work with a real estate agent just because it's a friend or a family member or someone they know, rather than working with the agent because it's the best agent they could work with. And it perplexes me now because with big decisions like major medical surgeries, you want to work with your best doctor. And with the biggest financial decision of your life, you would think you'd want to work with who's the best. So once I got into this industry after serving in the Navy, I started to realize not all real estate agents are made the same, just like every other industry. And not all have the same level of knowledge, expertise, or skill set. Working with the right agent can save you a lot of money, can help you along the process, and can get you the property you want. Working with the wrong agent can have the opposite effects. So if anything, I guess this is my little pitch to say, if you work with our team, great. If you work with a different agent, that's fine too. Just make sure no matter who you work with, when you're buying your first property, it's someone who's going to educate you. It's someone who does this full time as a professional. It's someone who owns real estate themselves, novel concept there. And it's someone who can give you access to what you're looking for. And that leads me into what we're going to talk about today, these down payment assistance programs. Truth is, most real estate agent, most lenders are not familiar with these down payment assistance programs because they're a real niche part of the market. And you have to take a little additional time to really study them and learn about these programs, which my team does. And then we take it and we turn it around and we share it with consumers and clients like you, because at the end of the day, knowledge is what empowers you. So speaking of knowledge, let's talk about some of the difference between buying versus renting. Those of you who already own real estate know this very well. But for those of you who maybe have never owned real estate, you're thinking of buying, you're also a renter right now, let's talk about some of the main fundamental differences. When you buy real estate, just like rent, you pay something every month, but a portion of that you get to keep. That portion is called your principal. And along with being able to keep a portion of your payment every month, the principal payment, you also build equity in the real estate asset. And that equity grows for you, not just through principal payments, but also through appreciation, allowing you to accumulate an asset that will likely be worth more than your retirement account by the time you hit your 50s and 60s. Thus, this asset is going to be the one thing beyond your 401k, beyond your pension, that allows you to retire, because you have a fixed monthly payment when you own real estate for the rest of your life, and it goes away in 30 years after you pay it off. Owning also gives you financial credibility. And what I mean by that is lenders will give you better terms for loans, even on things like cars and credit cards, because you build your credit score when you own real estate, helping you with all forms of lending. You also have the intangible pride of ownership, the ability to paint your house, paint your walls without having to ask anyone for permission. And financial freedom, we all know what that is. You finally get to start to realize that financial freedom when you own, and you certainly realize it once you've paid off your mortgage. Because as I mentioned, a mortgage stays the same for 30 years and then it goes away. And now you're pretty much living next to free. Whereas rent goes up every single year, every single few years. As you see on the right-hand side, if you are a renter, you've probably experienced it once or twice before, but your rent traditionally goes up. San Diego has now become the third most expensive rental market, as we recently mentioned. Rent is a liability. It's a liability that never goes away. Unlike a house, where you're paying to live there for 30 years, and after 30 years you own the house free and clear, it's just an asset now and you have the equity in it. Rent is something that never goes away. You never own the building, and it goes up throughout time, making it a liability with no ownership, because you're investing in your landlord, somebody else. It hurts your potential to retire. I don't know how anyone in San Diego can ever retire unless they own a house. If you're renting in San Diego, I simply don't think you'll ever be able to retire unless your 401k gets into the multi-million-dollar level, because I can't imagine. Well, I'll show you in a minute what rents will be in about 30 years. You'll see an Excel spreadsheet we built. When you rent, though, you can also be kicked out at any time. Even with tenant protection laws that we have in place in California, there's still ways for a landlord to be able to legally kick you out of your house. As we already mentioned, rent goes up. So what we are imploring you to do for your own good is trade rent for a mortgage. You need to pay to live no matter what. Why not pay for something you own and stays the same price month after month, instead of something you don't own and goes up every single year? So what makes up the parts of a mortgage? There's two primary parts. The first is interest. Now, this is the portion of a mortgage you pay to the bank for borrowing the loan. Right now, you've heard interest rates are around 7%. We're probably pretty topped out at 7%. And in the future, you will see interest rates start to go down over the course of the next year or two. Now, you might be thinking that you're going to wait for interest rates to go down before you buy. I'll tell you, as a guy who has a master's degree in real estate and an MBA with a focus in finance, I wouldn't recommend waiting, because when interest rates go down, what do you think is going to happen to home prices? All of a sudden, more people can afford a home, more people will get into the market, home prices will go up. So it's in your best interest to buy a house before home prices go up even further. And trust me, they will go up further. But that is your interest portion. Right now, we're sitting around 6.5%, 7% on interest rates. Principal is that portion of your monthly mortgage payment that goes back to you. It pays down the mortgage balance and becomes equity that you own within the house. You can think of it as money that comes back to the borrower, and you can pull that money out sometime in the future through either a sale of the property when you want to go buy a bigger and better house, or maybe through a cash out refinance. This graph in front of you is a really good depiction of a 30-year mortgage and the differences between the principal and the interest payments. As you can see, the mortgage payment stays the same throughout the life of the loan. In this example, about $2,000 a month, $24,000 a year, but the balance of the mortgage goes down over time. The balance is the dark blue dotted line. And you can see, although it starts out high, well over 400,000, over time, the balance of what you owe goes down, just like any other loan. At the beginning of the loan, the light blue, or I guess the medium color blue, that's your taxes, or interest that you're paying. And your interest payments also go down over time as your principal payments, the dark blue, go up over time continuing to build you equity in that property. So I want to share with you a financial calculator spreadsheet that I created when I was in business school, and it really shows you the differences between owning and renting, specifically the financial differences. I always like to say people can lie with words, but you can't lie with math. Numbers are numbers, and math is a universal language that does not lie. So what if I told you this property on the left, which by the way, is a condo in downtown San Diego in Little Italy. I know this condo really well, 801 West Hawthorne Street, because I happen to own it. Bought it in 2009. What if I told you today you can rent this condo for $3,000, or you can buy the condo and your mortgage is going to be $3,990? Most people would look at these two numbers and they would say, well, 3,990 is a lot more money than 3,000, so I'm going to rent it. Most people in the media would say it's cheaper to rent because it's 3,000 versus 3,990. Well, I'm here to tell you, most people, including most people that write articles, blogs, the media, you name it, have degrees in all kinds of things, but they don't have degrees in finance. They don't have degrees in math, and they don't know how to really peel back the layers of what I call the financial onion to show you the real cost of renting versus owning. Because trust me, if I looked at this and I saw 3,000 versus 39, of course I would rent it based on these numbers alone. But when we really peel back the layers using math, I'm going to show you how 3,990 a month, because you own it, will make you $3 million wealthier than if you rent it for $3,000 a month. I'm also going to show you on the next slide how $3,990 becomes just over $2,000 a month in the cost of living. And I'm going to show you how that $3,000 you're paying in rent becomes over $12,000. And we'll show mathematically why owning, even though your mortgage is $3,990, is so much cheaper than renting the same property for $3,000. Let's get into math. What you're looking at right now is a very complex spreadsheet. I get it. I just want to show you kind of the zoomed out version of this spreadsheet to illustrate that this is a pretty complex mathematical model we built in Excel, and it goes down 360 months. You can see these months here in the center. 360 months is obviously 30 years. So it's a lifetime of a mortgage. What I want to zoom in though for you is really the answers to the equation. Everything in the top left of this rent versus own spreadsheet. So let's zoom into the top left. Now that we're zoomed in, you can see a bunch of cells filled out in blue. In Excel spreadsheets, blue are cells that you type in your inputs, and then every other color of cell gives you the calculated answers. So you can see here, if you bought this property for $500,000 and you had 1% closing costs, $5,000, and you put down only 5%, that's only $25,000, and you had a mortgage at 6.5%, with all these inputs on the left. As you go down further, we also have a few more assumptions. Your annual rate of appreciation is 6%. Why is that? Because the 50-year average rate of appreciation of San Diego real estate is 6%, excuse me, not 66%. And 50 years of data is pretty good to go off of. You could rent this property for $3,000. We know that because we're renting it right now to a tenant. And rent increases can go up anywhere from 5% to 10% a year. So we put that in the bottom left as well. And we were very generous to this tenant, assuming only 5% rents, not up to 10. On the top right here, you can see real estate taxes, 1.25% of the purchase price. Insurance, about $800 a year. HOA fees, about $400 a month. So now that we have our inputs, let's look at what happens to Mr. Renter versus Mr. Owner over the term of 30 years. And this is going to tie into why I said, I don't know how you can ever retire if you rent, but you certainly can if you own. Here's all of our inputs. And we'll start on the far right where we have a red circle. And you can see, as already discussed, The owner who buys this property for 500,000, when you add up their principal, their interest, their taxes, their insurance, and their HOA payment, they're paying $39.90 a month. The renter could rent the same property for $3,000 a month. And again, this is where most people stop. And this is where publications stop and the news stops and the media would say, hey, it's cheaper to rent than it is to own. Your uncle, your brother, your best friend at work would say it's cheaper to rent than it is to own because 3,000 is cheaper than 3,900. But when we really peel back the layers of the onion, let's look at another section here. If you own the property over 30 years, you'll pay 1.597 million, almost 1.6 million. But if you rent a property where the rent today is 3,000 and the rent only goes up 5% a year, not 6, not 7, not 10%, just 5% a year. Over those same 30 years, you pay 2.39, almost 2.4 million. That is a difference of almost $800,000. So you can quickly start to see over a lifetime, the renter, while they think they're saving money today, will pay nearly $1 million more to live in the exact same place. This is why over time, and I hope all of you plan to live for a long time. If you didn't plan on living for another 10, 20 years, then I would say maybe just rent and travel the world. But if you plan on having longevity and being on this earth for as long as possible, it makes so much more sense to own than to rent, just based on what you pay over 30 years. But let's move on to what happens at year 31. At year 31, your 30-year mortgage is now all paid off and it goes away. So the owner now is only paying HOA fees, home insurance, and their real estate taxes. And even if those fees go up over time, the homeowner is now only paying about $2,000 a month to live, and they are retired because their cost of living is so low. Whereas the renter is paying over $12,000 a month. And you might think, Patrick, that's crazy. How does $3,000 a month become $12,000 a month? Well, folks, that's math. And that's how inflation works. And we all learned that in the last couple of years. But when you have $3,000 a month in rent and it goes up only 5% a year for 30 years straight, that number becomes $12,000 a month. Not only is this incentive to not rent and to own instead, think a little bit down the road. This is incentive to own investment real estate as well, beyond just the house you own. Because imagine buying an investment property today that pays $3,000 a month in rent, and in the next few decades is paying you $12,000, almost 4x. The last column to go over is obviously this last one, net worth increase. So what's that all about? Well, as an owner, you own the house, you own the condo in this sense. And if that real estate property that you bought for $500,000 goes up in value 6% per year, year over year for 30 years, again, that's the average rate of appreciation in San Diego, that $500,000 property is now worth $3 million. And you're probably thinking of the same thing. How does $500,000 become $3 million? Again, that's the power of compound interest, the power of a compound return on a $500,000 asset that you bought for $25,000 because you only put down $25,000. This is how you and anyone in the world can become a multimillionaire. If you have $25,000 to put down to buy a condo in San Diego, you can be worth $3 million within 3 decades, within your lifetime, easily. And if you don't have $25,000, that's fine. The rest of tonight's webinar is going to discuss these down payment assistance programs that will give you the $25,000 and then some. And as you can also see here in red, the renter, what's their net worth increase? Obviously, it's zero because they don't own the property. They are forever losing. It's not good to be a renter, guys. So let's talk about these down payment assistance programs and how you can access some of the money and maybe some of the programs that might be the best fit for you. Now, a survey was done throughout the United States, and it asked, what is holding you back from buying your first property? The number one response was a lack of a down payment. So we're going to overcome that hurdle tonight. The number 2 response was not knowing where to begin. We're going to talk about that tonight as well. So with these down payment assistance programs, as I previously mentioned, you don't need to be a first-time home buyer. For some programs, there's no income limits. You can make $150,000 and still qualify for some of these. You can own multiple properties. You can be an investor. You could say, hey, Patrick, I bought a condo on the East Coast, bought it 10 years ago, haven't lived in it in 5 years. Do I qualify as a first-time buyer? The answer is yes, as long as you haven't lived in a property you own in the last 3 years. 2 important things. The lender you work with matters, guys. I cannot impress this upon you enough. Most lenders, and oh, by the way, most realtors do not understand these programs because they're very niche, they're very specific. And just like every field, doctors, lawyers, teachers, everybody has their specialty and they don't know much about other people's specialty. And it just happens that the specialty we have within our team is down payment assistance programs. Going to any real estate agent out there to help you get free money in a down payment assistance program is like going to any doctor out there to give you heart surgery. Not just any doctor can give you heart surgery. You have to go to a heart surgeon. Same with these programs. Not just any lender or real estate agent is going to understand these programs or be able to help you that well navigate these programs. So who you work with definitely matters. Most lenders and realtors are just simply not familiar because you need additional resources to learn these. So what I want to share with you is a sample website that as a real estate agent, we look at to see what programs exist out there. Now you're looking at a California Association of Realtors website. Another important reason why it's best not to do this on your own, but work with a realtor so you can access this stuff. And I typed in the property information, a very familiar property to you. It's that condo in Little Italy that we just went over, 801 West Hawthorne Street. And I already said it's worth about $500,000. Even though it's a condo, it's still considered single family. It's one unit you would buy. It's not foreclosure. When we just simply type in this property information, we click on how many programs, down payment assistance programs, does this property qualify for? 27 programs. Now we want to put in specific information about you, the buyer. So how many people live in your household? Maybe it's just you, maybe it's you and a partner. And so 2 people. Do you currently own a home? You can see if I select yes, there's still 12 down payment assistance programs that you qualify for. But let's say you've never owned a home before. You're a first-time home buyer. And you can see here, no, but I did within the last 3 years. So 3 years is a very magic number. Say, no, I've never owned a home. 27 programs for you. Now, what is your annual income? Let's say you make $60,000 a year. You're still going to have 27 programs. But let's say you make more than that. Maybe you make $130,000 a year. There's still 21 programs available for you. That's why I wanted to share. You can make 6 figures and still have access to nearly 24 down payment assistance programs. Are you a military veteran? If you are, a few more programs available for you. But let's say you're not. Are you or the co-borrower, just one of you, Native American? If you are, there's another program for you. But again, let's say you're not. Click the continue button. Do you work in education, law enforcement? Are you a firefighter or a healthcare worker? Maybe you're a nurse. Let's click on that. Nothing popped up there. How about education? And I'm guessing a lot won't pop up here because we already put in a lot of criteria that qualified for you for most of these homes. Are you disabled, member of the military, law enforcement, energy efficient home, that type of thing? But when we click on view programs, we start to see all the various programs from the California Housing Finance Authority. You'll see that there's some programs for San Diego specific. You see the Golden State Finance Authority, CBC. Towards the bottom, I think we'll see some of these San Diego programs that we're going to, here it is, San Diego home buying programs. And we're going to deep dive tonight into the San Diego ones. If you want to learn more about some of the other programs, we've already done some webinars on those that we've uploaded to YouTube. And you can definitely check out our YouTube channel by just going to YouTube and type in my name, Kappel Realty, and you'll see a lot of the other programs. But now that you can visually see there's well over 20 programs available, this is why I say it's very important who you work with, because you don't want to just willy-nilly pick any of these random programs, because you're not going to qualify necessarily for all the programs. And let's say you qualify for 10 of them. How do you know which one is the best one for you? And that's why you got to work with someone who knows how to navigate these and steer you in the direction of the best down payment assistance program for you. Again, if you know anyone that these could qualify to, feel free to share my YouTube video with them. Just type my name into YouTube and this video will pop up by tomorrow and you can share it with them. But let's dive into some of the San Diego specific programs. And we're going to spend a little bit of time talking about these because I haven't covered these programs in any of the previous webinars. So starting out with the City of San Diego low income program. And if you make median income, higher income, we're going to get to those programs in just a minute, right below this one. But the low income program means you make less than 80% AMI. All these programs that we're going to unveil here on the left, they're going to show what percent of AMI you have to make to qualify. What is AMI? Area median income. How do you know if you make less than AMI, 80%? It's based on the number of people in your house. So bring your eyes down to the bottom left side of the screen. And on the bottom left where I'm circling, you see the income limits based on the number of people in your house. Now, if it's just you, look at one person's line. If it's you and a partner, like a spouse, look at 2 people. If it's you, a spouse, and a child, 3 people. 2 kids, 4 people. If you're a single parent and you have 3 kids, that's 4 people. So you just look at how many family members you have living in your house. That's the number of people. And then you scroll to the right. So let's say you're a single parent and you have 3 kids. 80% of area median income, AMI, is $110,250. So if you're a single parent and you make less than $110,000, you qualify for this this program. If you're dual parents and you have 2 kids, same number, 110 right here. If you have 1 child, 99,000. We're going to get to the 120%, 150% AMI on some other programs, but I just quickly wanted to describe to you, what does 80% AMI mean? What does 120% AMI, area median income? Just take your eyes to the bottom left and you'll be able to see where you fall out. So this first program is only for the city of San Diego, so it's got to be within the city. Down payment assistance, amazing. They give you 22% of the purchase price, okay? So if you buy $1 million home, the city of San Diego will give you up to $220,000. Imagine the government giving you over $200,000 to buy a home. It's real, it happens. There's a client of our team who bought their first house just a few months ago, and they got over $150,000 given to them by the government to buy their first house, tax-free, just insane. What else will they give you besides 22% down payment? They'll give you closing cost assistance up to $10,000 to go towards your down payment. What are the sales price limits? If you buy a condo or a townhome, $603,000. If you buy a detached single family home, you can spend over $1 million, 1.03. What's the minimum down payment required by you, the buyer? So you do have to have a little skin in the game. And for this program, 3% down has to come from you. So let's say you buy a $500,000 condo, 3% has to come from you, and that would be $15,000. And then the other 22%, so about $100,000, is going to come from the city of San Diego. DTI, that stands for your debt to income ratio. I'm not going to dive too deep into that tonight. It's a mathematical equation that a lender does to qualify you. It's simply, though, the ratio of what's your total monthly debt divided by your total monthly income. The maximum they want to see is 45%. You do need to have a FICO credit score of 640 or above and assets of $25,000. And that can be things like in retirement accounts. So what's the term of all this money they give you? They lend you all the money, very, very low interest rate, 3% of deferred payments you don't have to pay for 30 years. And you just pay that money back when you sell the property in the future. The grant, the down payment, closing cost is forgiven at closing. The next program, this is a really good program that's going to apply to a lot of people because the income limit is very high. This program is also known as the BIPOC program. And you can see it right here, BIPOC. That stands for Black, Indigenous, and People of Color. Pretty much this program applies to just about all San Diegans who are not Caucasians. You don't have to be African American. You can be Asian, you can be Middle Eastern, you can be Indian. All types of ethnicities will qualify for this program. You'll want to check with a lender, and we can put you in touch with the right lenders that do these programs. But the thing about this program that's going to ensure a lot of people qualify for it is you can make a lot of money and still qualify for this program. As you see, this program is not for people that make less than 80% of the median income. The last program was that. This program is for people that make over 80% up to 150%. So what does that mean? If you're a family of four, you can have a household income of $175,000 and qualify for this program. If you're a family of six, you can make over 200,000 and qualify. If you're a single person, you can make up to 122,000. So really high income limits, guys, and a lot of people are going to qualify for this. How does this program work? It works in a very wonderful way, to put it bluntly, but they give you a total of $40,000. So unlike the last program where you can get $100,000 plus, this program gives you $40,000, but $20,000 is a grant, meaning it is forgiven as soon as you close escrow, you buy the property and keys are in your hand. So $20,000 of the $40,000 forgiven immediately. The other $20,000 in the loan has a lower interest, 1.5% interest. It's like a little secondary mortgage on your first, and you don't have to pay anything on it for the first 7 years. How high of a value can you buy? You can buy a single family home or a condo up to 1.25 million. That's a pretty nice property. Minimum down payment required. You, the buyer, still need to put down 1.5%, but you can also put down more money if you would like to. The debt to income ratio is a little higher, up to 50% for this one. FICO score is the same, 640, and you can have more money. You can have $50,000 in the bank and qualify for this program. This is a great program that's going to qualify, that's going to apply to many San Diegans. And you might think, well, what if I'm Caucasian, but my spouse is a person of color? You qualify for the program. And this is a program, again, where even if you're out there looking to buy a house and you already qualify, even if you got 25% of your own money to put down, you might as well consider taking advantage of this program, because 20,000 of it is a grant, money you don't have to pay back. And it's really just the city of San Diego trying to help folks get into housing. Next, we're going to move into county of San Diego. What if you're like, I love the programs, Patrick, but I don't want to live in the city of San Diego. I want to live in East County. I want to live in North County. Well, here's some county programs, guys. This one, like the first, is for low income, folks that make less than 80% of the area median income. Applies throughout San Diego County, and you get 17% of your purchase price covered. Again, it's through an interest deferred, it's through a payment deferred program that you don't make any payments on for 30 years or until you sell. Closing cost assistance, again, you get up to $10,000. Now, this program caps out at $589,000. So you can buy a condo or a single family home up to $589,000. There's still some buyer down payment that you must put down, 3%. Your DTI income limits or debt limits are very similar to the first program at 30 and 45%. FICO score, kind of the same as the other ones, 640. Between you and me, if you're going to do one of either this first program or the second program, if you're buying in the city of San Diego, the first one is probably better for you. If you make more than 80% or more than 80% area median income, the second program's better for you. If you want to buy outside of the city of San Diego, but in the county of San Diego, then the third program is best for you. Again, this is why I've said before, and I can't say it enough, it's really important you work with the right agent and you work with the right lender to make sure you get tied up with the right program. And it's important that you do so quickly because these programs all have limited funding. Some of these programs have enough funding to only help the first 80 people. That's how limited the funding is. So it's important that you don't wait and that you get on the bandwagon really quick to get this free money. Because again, some of the programs, and maybe the one that's best for you, they only have money for 80 people based on what they assume purchase prices will be. A couple more programs. County of San Diego. Let's say you want to buy in the county and you make more than 80% of the area median income, you're in luck. There's a program for you. It mirrors a lot the program we just went over, the other county program. The only difference is this one gives money to people who make 80 to 120% of the area median income. So you can make around six figures, around 100,000 on up, and still qualify for the county program. The last two are very specific to other cities in San Diego. The first is Chula Vista. If you want to buy in Chula Vista, just like the city of San Diego, they give you 22% down payment up to 120,000. Unlike the city of San Diego, though, the purchase prices are a little bit lower at 826,000. And then the last one is the city of El Cajon. Similar again to the city of Chula Vista in San Diego, 22% of your down payment paid for by the city. What I'm going to do is the next slide is going to show you all of these programs in one screen for the city of San Diego and the county of San Diego, as well as the city of Chula Vista and El Cajon. So if you want to take a screenshot or a photo with your iPhone, now's the time to do it because you can see all 6 programs right in front of you, including the AMI on the bottom left. I'll pause here for about 10 seconds so I can get a drink of water and you can take a screenshot of this. All right. Now, guys, these are just 6 programs. And as you saw in the previous slide where we went over all the programs eligible for you, there's well over 20 programs. That means there's, 15 or more programs that we're not even covering tonight just due to time. If you want to learn more about these programs or which program is the best fit for you, just shoot me an email, reach out to my team. You can just type my name into Google, Patrick Kappel, and you'll find all kinds of stuff on me, and you can just email directly out to me, and we'll get you set up with the best program for you. Now, there's a program I want to talk about quickly that doesn't exist now. So why am I talking about it? Because it did exist a few months ago, and it's coming back in 2024. The California Dream for All. This program made big news. This is a program that was all throughout the state of California. You could make 150% of the median income and still qualify. This is a program where we got our clients hundreds of thousands of dollars for free. And there was no interest associated with it. And I'm sharing it with you now because this program is coming back in 2024. You need to know this now if you're going to use this program next year. You already heard me say that if you want to buy real estate, you should buy now, don't wait, because prices will keep going up. You're hearing it from a guy with a master's degree in real estate. But if you do wait, you want to make sure you get pre-qualified for this program before it comes back out in 2024. Why is that? Because the funds for this program in 2023 ran out in about 2 weeks. And the only people who got the money were primarily people that were already qualified for it. So if you're going to use this program next year, you'll want to get qualified as soon as possible. And yes, I see the question coming in. Should you get qualified before you look for a house? Yes. Getting qualified to buy a home is like brushing your teeth in the morning when you wake up. It's the first thing you should do. You should get pre-approved for a home loan, guys, even 6 to 12 months before you want to buy. And you might think that's crazy. Why would you get pre-approved 12 months before you want to buy? Because if you wait just a few weeks or a few months before you want to buy, what if the lender does a credit check on you and finds a skeleton in the closet that you weren't even aware of, like an unpaid medical bill for $50 that you weren't aware of? And I share that story because it happened to one of my clients who makes over $200,000 a year, and they could have paid that $50 medical bill at any time. They just didn't know what happened because they moved and the bill went to the wrong address, lowered their credit score. If you get pre-approved and the lender finds a skeleton in the closet that you didn't even know about, if you have a few months, the lender can help you get that removed from your credit profile. So get pre-approved as soon as possible. If you are thinking of buying real estate anytime in the next 12 months, reach out to me after this meeting. And Christine, if you could type my email address into the chat, and I'll also share that at the end. But we'll get you connected with the right lender sooner than later. But even though this California Dream for All program ran out of money in 2 weeks and it no longer exists for this year, I want to share these details with you because it is coming back next year. Now, what I'm sharing with you on the screen in front of you is the guidelines and rules that applied for 2023. Trust me when I say this, the rules will likely change a little bit in 2024. The California Housing Authority has the obligation to modify the rules as they see fit each year, but it's worth looking at what this year's rules were. They gave you up to 20% of your purchase price. You didn't need to be a first-time home buyer, again, as long as you didn't live in a home you own for 3 years. The funds could be used towards down payment or closing costs. You could make up to $211,000 and still qualify for this, even as a single person, guys. Didn't matter your household size. That's why this money went so quickly, because you could make a lot of money and still qualify for the free money. It was a conventional loan. You needed a credit score of 680, so a little bit higher credit score requirement. Guys, when the government's giving you hundreds of thousands of dollars, tax-free, no wonder the money goes fast. And I know what you're thinking. You're thinking, this sounds too good to be true. And I know you're thinking that because I'm a human just like you. And it does sound too good to be true. I wouldn't argue that. But guys, it is true. Trust me, as a guy who served in the military for 23 years, that means I work for the government. The government has a lot of money and they give it away. And if you know the right people and if you know the right avenues, you can get some of that free money. It's not using the system. This is money that's going to hardworking families that live in San Diego that might just need a little bit of assistance to buy their first home, because real estate costs a lot in San Diego. Let's be honest. ADU financing. There's also grant money being given to people to build ADUs. So maybe you already own a house, maybe you will in the future, and you want to put an ADU in the backyard so that, you know, your in-laws can move in, or so that you can Airbnb it, make a little money on the side. There's grant money being given to folks to build ADUs because of the housing crisis that we have right now. You can't talk about home loans and home loan assistance without talking about the VA home loan, especially in a military community. Now, this applies to you even if you're not a military vet, potentially. Why is that? Because if you're not a military vet, but if you get married to someone who's a military vet, you and your spouse can use this VA home loan together. Or maybe you've got a family member, a friend who's a vet, share this info with them. With a VA home loan, which has been around since about decades, I want to say the mid 1900s, with that, it's available to military veterans and their spouses, 0% down. This is the only loan that has been around for decades and will continue to be around that allows you to buy a property with 0%. You can use the VA loan multiple times. I know it because I've done it as a military vet myself. There's lower credit requirements. You don't need a perfect credit score. Interest rates are lower oftentimes with the VA loan. When I have a client who's a military vet or married to a military vet and they have a million loan options, 99 out of 100 times the VA loan is going to be the best option because it often does have lower interest. Again, good for all military and veterans. You can be active duty military. You can have served in the reserves and potentially qualify. Now, not 100% of people that were in the reserves will qualify. You have to have served a certain amount of time. You've have gotten, good discharge and whatnot. But again, most military vets will qualify. And there's no private mortgage insurance. That's an additional insurance you pay when you have a low down payment loan, but it does not apply to the VA home loan. Another home loan that's available to civilians, you don't have to have served in the military. The FHA loan, Federal Housing Authority loan, is a loan available to home buyers with a low down payment, not 0%, low down payment, 3.5% down. Also has lower credit requirements. Interest rates can be lower. If you're looking at these programs, though, the best option is probably going to be the down payment assistant programs that we already discussed during the first portion of tonight's presentation, because a lot of the money is coming from the government, not your own checking account. FHA does have private mortgage insurance. These government programs that we already covered, where San Diego is giving you 22%, and then you put down 3%, you now have 25% down, guys, with 22%, most of it coming from San Diego, meaning your monthly mortgage payment is going to be 25% lower than it would have otherwise, because you got this big down payment from San Diego and you don't have private mortgage insurance. It's really a win-win. So we've gotten over the biggest hurdle. Where do you get your down payment? Number one reason people don't buy homes. We just knocked that hurdle down for you. You can buy a house now. We're giving you the down payment for free. The number two hurdle that people have is they say, where do I start? Never bought a house before. Where do you begin? Well, you're at a good place right now by watching this webinar. Let's talk a little bit about the home buying process. It usually begins working with people, like everything in life. You want to work with a trusted team. I always emphasize working with teams versus individual real estate agents. Individual real estate agents are great, but when you work with a team, it's like anything in life, from sports to jobs to careers. You now have the backing of a whole team helping you and acting like a brain trust to make sure your transaction goes smoothly and you get the property you want. But typically, when you work with a team, like my team, how do we do it? After this webinar, if you're interested in buying a house, you shoot me an email. I email you back and I say, nice to meet you. Let's have a 60-minute meeting. We can do the meeting on Zoom, so you don't even have to leave your house. And the meeting is usually you, your spouse, if you have one, me, one of my team members, and we talk about you for 60 minutes. And we talk about what you want, where you want to live, what you want to buy, what type of job do you have, how many bedrooms do you want. By the end of that 60-minute presentation, we got a pretty good idea of who each other are, and we get to work to help you find the right house. And we introduce you to a lender that can help you with one of these down payment assistant loans. When we introduce you to that lender, you need to gain pre-approval. That process usually involves giving the lender 2 years of tax returns, 2 months of pay stubs, and also copies of your bank statements so they can see how much you have in assets, in cash. How big is your checking account, your savings account? Because as you saw in some of these programs, some of them require you have some money in the bank, some of them don't. Lender is going to need to see that, and they'll also pull your credit score, and they'll let you know if there's anything in your credit profile that you can do to increase your credit score to get better lending terms. After the lender has pre-approved you for a loan, then you meet with my team again, and we talk about, hey, based on this approval amount, you're approved for 600,000, you're approved for 400,000, or you're approved for $1 million. Then we'll start discussing various home options that fall into the amount that you've been approved for with your loan and your lender. We'll talk about condos versus townhomes versus homes. Then we go out, we look at properties, and that's the fun part. That's like the part you see on HGTV, Love It and List It and all these other shows. You go out with a real estate agent, member of our team, and you look at 6 homes, 10 homes, 20 homes, as many as it takes for you to find that perfect home that is the one you want to move into. Oh, and let's talk about the perfect home for a minute. A lot of times, I always tell people, the perfect home is the home you can afford that meets your basic necessities. When I bought my first house, it was a condo in Bonita. little one bed, one bath. I didn't want to live in Bonita. I wanted to live by the beach. So why did I live in Bonita? Because it's all I could afford at the time when I was 27 years old. And the right home for you, your first home, is the home you can afford. And then usually you live in that home 3, 4, 5 years, you build some equity in it, and then you can sell that, take your equity to buy your dream home. And it's usually your second, maybe your third home that you're finally buying that dream home that you've always wanted. And you only are able to do it because you bought that first home that allowed you to build up equity over time. Once you submit your offer is accepted. It's about a 3 to 4 week long process for inspections to be done. And then you move into your new home. This is the same process, just in a graph, because I'm in the military, so we all love our charts and our graphs. But as you can see, it's the same thing. You start out with a real estate agent, one-on-one buying strategy, meet with a lender, look at homes, make an offer, open escrow, close escrow. I know it seems very simple to put it down into 6 blocks. Trust me, there's a lot more going on behind the scenes. There's like over 500 pages of documents that as real estate agents and as buyers, we look through, we go through, we sign. There's a lot to it. It's very complex. But this is it, kind of just broken down as simple terms as I could make it. Now, technology today is great. And with technology today, we can look at homes even before we go see them. So within our team, we create something for you called an interactive search gateway. It's an online platform tailored just for you. Your price point, the neighborhoods you want to buy in, the number of bedrooms, single family versus condo. And on this website, my team can communicate with you and you can communicate with my team, and you can tell us what homes you like, which ones you don't, which ones do you want to go see this weekend, which ones do you want to go see tomorrow night. It's a really great interactive way to communicate with the team helping you buy your property. Additionally, because I work at Compass, which is the largest brokerage in the United States in the amount of volume of homes sold, we work at the brokerage that sells more real estate in San Diego than any other brokerage. And that's in terms of volume by dollar amount. Why is that important to you? Because within our brokerage, a lot of times properties going for sale will be shown within our brokerage and only to our clients before the rest of the world can see them. That's the other advantage of working with a team. We also have a lot of properties for sale just within the team that only our clients can see. So when you do work with a real estate agent, you make sure you work with someone who's on a team, and you make sure you work with someone who's at the brokerage that does the most amount of volume every year. And by doing those two things, you ensure that you will have the most exposure to off-market properties. Now, let's be clear. Every brokerage has off-market properties. But if you're a math person, you can understand the brokerage that does the most amount of volume each year has the most amount of off-market properties. Once we identify the property that you want, maybe we find it off-market, maybe we find it on-market, we analyze it. What do I mean by that? Well, we do a home inspection, and we've got inspectors that we can connect you with. Home inspection costs anywhere from $300 to $800, depending on the size of the home. If it's a huge mansion, it can be even higher. But the home inspection is money well spent, because that inspector is going to look at everything from the roof to the foundation and everything in between, from plumbing, electrical to insulation. That home inspection, I like to say it's a static inspection. They'll find just about everything, but not 100% of everything, because a home is like a ship or like a car. You can inspect it static, but it's not until you take it on a 200-mile road trip, not until you move into it, you start to notice things that are a little off on it, perhaps. And that's why we get all of our buyers a home warranty. The home warranty covers the majority of your major appliances for the first year that you live within the house. We're getting towards the end, and I want to dispel a couple of myths with buying a home. The first is I don't need a realtor or a lender. Hopefully, I already dispelled that myth. By working with a real estate agent, you will get access to things you're not aware of. You'll get access to loans you're not aware of, to properties that are for sale that are not aware of. You'll also have the warm fuzzy that you're working with someone who does this day in, day out, sells dozens of homes, if not more per year, and knows how to get you through the process, really without getting hurt throughout the process. You'd imagine what happens when people try to represent themselves. It'd be like trying to do surgery on yourself. You can try it, but you might get hurt in the process. Another myth, it's cheaper to rent than buy. Hopefully we dispelled that one with the Excel spreadsheet we went over at the beginning, where we showed you how $3,990 in a mortgage is actually cheaper than $3,000 a month in rent. And you saw how much cheaper that is over time when you peel back the layers of the financial onion, and you saw how expensive it becomes over time to rent. And the third myth is there's a better time to sell or buy a house. Guys, I'm telling you, there's a few sayings in real estate, just like there's sayings in life, because they're true. A penny saved is a penny earned, right? That's the saying we all know. Here's some real estate a piece of advice that are just known in the community. Don't wait to buy real estate and then wait. And the best time to buy real estate was yesterday. The second best time to buy it is today. The sooner you buy real estate, the sooner you have the power of that appreciation working for you. I want to go through a couple of charts that give you just a short overview of what's going on in the real estate market, because there's a lot of false information out there. There's a lot of bad information out there, to be honest. I'm going to give you some real charts and data, not my opinion, but charts and data to show you what's really happening. And if you want more information about what's going on in the real estate market, I do a full 90-minute presentation that does a deep dive into the real estate market. And I show you real data and charts that paint a picture to indicate what direction is a real estate market going to go. Are prices going to go down? Are prices going to go up? Or are they going to stay the same? If you go to my YouTube video, my YouTube channel on YouTube, again, just type in Kappel Realty, and you'll find the last 90-minute market update that we did. Lots of information. I pulled about 3 or 4 slides from that update. The first one is a forecast of homes appreciating or depreciating in the coming years. Now, this was a survey done of over 100 economists throughout the United States, and it asked how many of you think homes are going to appreciate in 2024, 2025, 2026. And as you can see, the majority consensus is real estate values will continue appreciating in the coming years. And it's due to one reason. We just don't have enough supply. Is you all took maybe basic economics, at least in high school, maybe in college, and you all know from Econ 101, the value of everything comes down to supply and demand. We just don't have enough supply. When supply goes down, prices go up. Doesn't matter if it's real estate, groceries, or gasoline. When prices go down, when supply goes down, prices go up. So here is our supply, folks. This chart shows you supply of real estate available for sale in the United States going back over 2 decades. And as you can see, entering the year 2023, we had an all-time historical low supply of real estate in the history of mankind. At least in my lifetime, in the last 40 some years, we've never entered a year with less than 1 million homes for sale. When you have such a low supply, prices are going to keep going up. Some of you who are maybe around my age remember the market crash that we had in 2007 and 8, the Great Recession. That occurred because we had simply too much supply, guys. Look at the supply back there. Well, if having too little supply wasn't bad enough, it gets worse to indicate prices are going to go up even further. We have the lowest amount of supply, guys, intersecting with the largest generation of first-time home buyers ever. As you all know, most Americans, when they buy their first home, are in their early 30s. Maybe they met a spouse, started having kids, and decides it's time to buy a house. So the median home, a first-time home buyer, 33 years old. If you get started before 33, like I did, I bought my first house when I was 27, you'll get a head start on all of your peers. But your average American buys their first home at 33. We have now hit a point in the United States today where the millennial generation is in their early 30s, going into their late 40s now. And the generation right behind them, Gen Z, is an even larger generation, and more Gen Zers want to buy houses than millennials. So you have this huge demographic patch of people in America hitting first-time home buying age, intersecting with the smallest amount of home inventory for sale. So you tell me, when anything has low supply and high demand, what area, what direction do you think home prices are going to go in the next 5, 10, 20 years? Guys, they're going to go up. So the bottom line is this: there is not a real estate crash on the horizon. There is not enough real estate supply, folks. Over the long term, real estate prices will keep going up. And as you all know, and you've seen in the headlines, rent will keep going up. Now is an excellent time to buy real estate, guys, especially considering that you have access to this free down payment assistance money, which, by the way, will run out. That's why it's imperative that you get on it sooner rather than later. I'll leave it on a couple of last thoughts. This one: in order to cross the finish line, you must first cross the starting line. What do I mean by this? Guys, in my career working in real estate, I have met a lot of people that tell me they want to buy real estate, they want to buy a house, but they never take the first step. Wanting to do something will never get it done. Action is only what gets things done. If you truly have that desire to own a home, to buy real estate, you can't just want it. You have to take action. Don't be that person that wants to buy a home. In 10 years from now, you still want to buy a home and you never did. Be that person who takes action. So what does that action look like? As I mentioned earlier, who you work with matters. And that action looks like an email sent to me. And oh, by the way, if you don't email me, someone on my team might email you just to check in and see if you do want to buy a house and if we can help you. But remember, who you work with matters. If you work with my team, as I said before, great. We would love to work with you. If you don't work with my team, that's fine too. My team has a lot of clients. We'll be fine. I want to make sure you are fine. So no matter who you work with, make sure you work with someone who's a full-time real estate professional who understands these down payment assistance programs and can connect you with the right lenders that understand these programs. Because at the end of the day, with all professions, who you work with matters. No profession is everyone the same. Certainly in real estate, some are better, some are not. If you're interested in working with us, certainly reach out. And the other thing I would recommend that you do, again, if you work with us or if you don't work with us, check out our YouTube channel. All you got to do is go to YouTube, type in Kappel Realty Group, and you're going to see all of these real estate webinars that we've recently uploaded, including Investing in Real Estate 101, how to buy multifamily properties. If you're a first-time buyer and you want a house hack, we got one for that. House Hacking 101, how to live in your home for free. And here's the one that I mentioned, San Diego Real Estate and Economic Update, Essential Home Buying Information. If you watch any of these webinars, I recommend you watch the one on the top right, San Diego Real Estate and Economic Update. That does a deep dive into the state of the real estate market. And anyone who thinks there's a crash on the horizon or it's a bad time to buy, or if your friends tell you that, have them watch that webinar. Again, it's not my opinion. It's just a lot of data that I share with you. And I'm a guy with a master's degree in real estate. I think that'll be a very eye-opening webinar. Even got one down here, how to cash flow $100,000 a year. And as I mentioned, this webinar, down payment assistance programs, this one that we covered tonight will be uploaded later on this evening or tomorrow morning. Our next live webinar is going to be on July 26th, coming up here, and that's going to be Essential Real Estate and Economic Update. The last economic and real estate update I did was in June, so this is going to be our July version, showing you what's happened in the last 30 days and what's likely to happen in the future of real estate. So if you want to watch that one live, July 26th, otherwise, we will upload it to our YouTube channel under Kappel Realty. I appreciate you all joining tonight. And if you do want to work with my team, or if you have a friend or a family member that could benefit from these down payment assistance programs, shoot me an email. You can see my email address up there in the top right, patrick.kappel@compass.com. And we'll get right back to you and set up a meeting on Zoom to discuss your plans with real estate. With that, I'm going to scroll quickly through some of these questions. I think I answered the one that came up during the conversation, and that was, should we apply for a loan before we find a house? Absolutely. Guys, if you don't apply for a loan until you found the house you want, you're not getting the house. It's going to take at least a few days for a lender to pre-approve you. And when you submit an offer to buy a house, you got to submit it with a pre-approval letter from the lender attached. So for all of you out there, I recommend you get pre-approved well in advance before buying a property. When I buy real estate, I typically will get pre-approved months in advance just to expand on this. So yeah, definitely get pre-approved sooner rather than later. I see another question here. How will student loans affect your ability to get pre-approved? You can still get pre-approved with student loans. I know people that have over $100,000, $200,000 in student loans, and they get pre-approved. A lender doesn't care how much debt you have. That sounds crazy, I know. So what does a lender care about? A lender cares how big is your monthly debt payment. So let me break that down for you. If you have $200,000 in student debt, and your monthly payment on that, your minimum monthly payment that you got to pay, let's say is $800. That's better than if you have $20,000 in student debt and your monthly payment is $1,000. So lenders look more so at what is your monthly debt payment obligation. That goes into your debt to income calculation to determine how much of a loan for a house you can qualify for. What's your debt to income ratio? As we mentioned, most lenders want 50% or below. So what does that mean? Let's say you make $10,000 a month. Your total debt obligations have to be 50% or less than what you make per month. And if you make $10,000 a month, that means your total debt obligations have to be $5,000 or less. And that includes the new mortgage you take on. Now, if you have hundreds of thousands, millions of dollars in debt, can that hurt you from borrowing money? Absolutely not. I know real estate investors that have millions of dollars in debt, and they can still qualify for $1 million loans because it's the income the person makes relative to their monthly debt. That is what really determines what you get a pre-approved for. But Nicole, and for anyone with student debt, most people that buy their first home have student debt because we all come out of college with student debt quite often. So I recommend you meet with a lender sooner than later, as Christine mentioned, and get qualified for a loan or find out what needs to be tweaked to get qualified. Additionally, sometimes I meet young people that have never had a credit card, never had a car loan, never had any debt, because somebody told them one time that not having any debt and not having a credit card is a good idea. I'm here to tell you that's a really bad idea. You want to build your credit profile. You want to build your FICO score. Now, I will tell you, I have never carried a credit card balance. I have a credit card, but I pay it off every month. I teach my daughter the same thing. Live within your means, but you absolutely, by the time you're 18, 19, 20, you should have a credit card. Don't use it foolishly. Use it to buy your essentials and pay it off every month. And doing that is going to raise your credit score so that by the time you're in your mid to late 20s, you have a high credit score and you can get a mortgage. Nicole, I hope that answered your question. But yeah, tons of stuff we could talk about on that, guys. I hope to meet some of you in future meetings. And I look forward to having my team assist many of you buy your first home. I hope you learned something tonight. And hopefully for some of you on the call, we'll find a way to get you tens of thousands if not 100,000 or more in free money to buy your first home. Thank you for joining us and enjoy the rest of your day.